welcome everyone. I see some new names here. It's very nice to see new people always coming along and, interacting with everything. It's really, really good to see that, we're doing such a great job that other people are coming as well. So today we have a lot to talk about. We had GDP from German just yesterday. We had Australian CPI record lows since 2021. 2022, 2021. And this, definitely indicates to us, will the RBA do a cut this year or won't they do a cut this year? Maybe a cheeky 25, maybe even a 50, Lots of people are complaining about RBA haven't done any cuts yet this year. And all the central banks are still doing cuts and, like RBNZ just around the corner here from us. They're doing cuts, and why are we doing? Okay, so we're definitely going to be having a look on that. And as well, the third topic as the NFP, the Non-Farm Payroll, Non-Farm Payroll just around the corner. How should we trade it? Is it such a special NFP because it's the one NFP before the elections and before the Federal Reserve rate decision again for the next month? Okay, so next month, November, can you believe it that it's just 2 months after 2 months to finish the year? It goes very, very quick. So there's only 1 week, pretty much 7 days for the next FOMC meeting. And this is definitely going to be really decisive for what the FOMC will talk about and how they will actually interpret the data. And then later on, we're going to be having a look at EURUSD, Aussie dollar, the pound dollar, and gold as well. Gold hitting again, 2,800 and something price. So yes, there's definitely opportunities in the market right now, especially on Aussie dollar as well. We've seen the CPI coming lower. All right. Okay, so that has been said. Before we move on, please, guys, just have a look at the risk disclaimer and we can move on. All right. I think everyone could read it very quickly. So let's get into what it matters the most to us. Let me get out of this screen. Perfect. And let's bring it all to here. Okay. That's exactly what I want to talk about. Does anyone here drive a VW car? A Volkswagen car? I drive one. I have a Golf GTI. It's a beautiful car. I love it. Very comfortable. And they actually, on this photo right here, they're doing a Volkswagen Golf. Very nice. Yeah, so unfortunately, the reason being, one of the reasons that will affect even more the decrease of the GDP from the German is because Volkswagen is planning to significantly restructuring, doing some significant restructures that includes closing 3 plants in Germany. All right. So this will lay off tens of thousands of employees, and this will be cutting wages from remaining staff by 10%. Okay, so if you're getting paid $1,000, now you're going to be getting paid $900. This, of course, has some additional plans like downsizing the industry of what they hold in there, as well as all the German plants are impacted. Okay, all the German plants will be impacted. Marking a major shift for VW, has never shut down a domestic factory in its 87-year history. Okay, so that's really huge. It's the first time in history that that Volkswagen is actually shutting down a plant in 87 years. So that's crazy. This comes amid Volkswagen struggles with the weak demand in China, as well as China and Europe, coupled with a challenging electric vehicle, the EVs transition. Unfortunately, VW, as talking just a little bit more about overall, I was actually listening to a podcast a few days ago, and the guy was actually saying this. VW can't keep up with the EV. China is much ahead. Tesla is much ahead. Some USA is much ahead as well in terms of EV, electrical vehicles. Okay, so this is driving further pressure towards Volkswagen to reduce even more, right? So if there is a plan to cut 3 plants, to shut down 3 plants of Volkswagen in Germany and reduce the remaining staffs by the salary of remaining staffs by 10%, this will definitely have something to do with economy, right? It's not only like, oh yeah, this is it. No, China is much ahead, and we're seeing this. Okay, BYD, Build Your Dream, the car BYD. I don't know if you guys have heard about BYD. Most likely you have heard about it. 1995. It's founded in 1995. That's the car. Okay, so they are much ahead of VW, for instance, and they're from China. Okay, cheaper labor costs and etc. So, and definitely a lot of things happening. All right. So the proposed cost cutting includes a 2-year wage freeze. So removing 167 monthly premium and eliminating all the bonuses. All right. So union leader Daniela Cavallo criticized the VW lack of clear future goals, targets, and it called it the government action to secure Germans' industrial competitiveness. So in response, the Chancellor Olaf Scholz, I'm pronouncing his name correct, administration emphasized that the past management mistakes should not affect workers' livelihoods. So VW cited high operational costs up to 50% above competitors as driving the need for change, with executives stating current productivity levels in Germany are unsustainable. All right. So on Wednesday, yesterday, further talks are, next Wednesday, further talks are scheduled with union leaders, coinciding with VW's third quarter financial results. So that's going to be very massive for the market, especially after elections and everything. So definitely looking to after. Okay. Now, if we look to the data that we came in yesterday, all right, so we have the French GDP that came in much higher than expected. We have the German GDP that came in at 0.2%, and the negative 0.2%. Okay, so it's still negative. All right, so that's the unfortunately bad, and we still with a very high unemployment rate at 6.1% unemployment rate, higher than the USA. USA is at 4.2, 4.1 now, just varying around. And then we had today the inflation rate as well at 0.4. Inflation is still very high, and we're definitely going to talk about this in a few minutes later on in the live. Okay, so we have Eurozone inflation for today. As we can see here, we have German retail sales, and at 9 p.m. we're going to have the inflation rate year over year and month over month, and as well as unemployment rate. Most likely, we will continue to have a higher inflation rate month over month as well as year over year. You could be wrong because we had Spanish and we had German inflation coming higher. The biggest economies around Eurozone. So most likely we can continue to see a trend higher on the inflation outlook for Europe. Okay, that's my opinion. That's how I'm going to be trading the euro. I'm going to be trading long euro, and we are actually very, very close, if not have broke through the area I've mentioned about the I forgot the name, the resistance that I've mentioned about last week. Okay, we're going to have a look on the chart later on as well. Now, so that's the mainly reason why we've seen, GDP a bit lower on German. Most likely we will continue to see, all right, with Volkswagen continue to shut down other plants and reducing operational staffs. And, when we have such a big business like that leading the market, the closure of such a business like that, there is a huge, unfortunately, a huge take on the market. So yes, there is a very big feeling, okay, and investors get afraid because what if the economy is not, if one of the biggest manufacturing industries is not believing on the economy, why should I believe in the economy, right? So then they start to think about it, and then most likely we will have some contraction on euro if that happens, right? Now, what I want to talk again, there we go. So we had the inflation. Let me just come back here now. Can select all and just Australia. There we go. So Australia retail sales. Let me open the RBA website. I'm going to be sending the link to everyone, so no need to be looking around. Okay. So RBA inflation release. Inflation overview. Let me send these to the chat. Here we go. You guys can just click on the link and coming with me, right? Follow with me. So, okay. So as we can see, inflation has come down to 2.8% from 3.8%. So pretty much 1% year over year. So the annual change September quarter. So from September last year to September this year, we've managed to get down 1% of inflation. That is fantastically good. Okay. Now the Australian Consumer Price Index rose by 0.2%. Okay, the quarter over quarter. I'm not talking year over year. Falling is slightly below the expectation of 0.3%. It is a modest increase, okay, and it brought annual inflation down to 2.8%, marking the first time inflation has been within the RBA's target range of 2 to 3% since 2021. So, hey, we are on target, okay? The target is 2 to 3%, as we can see right here, target range. And we are at 2.8 at the moment. So we can see it right here at 2.8%. Since 2021. So since 2021, we can see here, so that is 2022. When was this? 2021, right here. We can see that June 2021, we were already above 3%. Okay. And then I can't zoom in. Yeah, I can't zoom in, but we can see here, right there, June 2021 CPI equals to 3.8%. So that was 0.8% above already what the target is. We went all the way up to 7.8% 7.8% in December 2022. And later, 1 year later, we went down to 4.1, and now we're down to 2.8. So since 2021, the lowest number since 2021. So that's fantastically. So this acceleration in the headline inflation is largely due to external cost relief measures. So the government rebates, okay, led to 17.3% drop in electricity prices, while the petrol prices also declined by 6.2%. And this relief helped shield consumers from border price pressures, providing a mixed picture of inflationary dynamics. Okay, so that's really, really great. Now, the second point is the core inflation. As I always say, it's it's one of the most important measures. And this is the core inflation is the RBA monitors much closely. That helps them to gauge the underlying price pressures. It rose by 0.8% over the quarter. We can see right here. Just low as well. It was supposed to be here, but it's not here, unfortunately. Don't know why. It's not good. Anyways, so as I was saying, it rose by 0.8% over the quarter, slightly above the expected of 0.7%. This, of course, will bring the annual core rate to 3.5%, down from the 4%, so 0.5 lower than that. That in the previous quarter, but still, still above the RBA's comfort zone. So we definitely have a lot to do. Most likely 1.5% yet. 0.5% would be great, but 1.5% would be ideal, I would say. Services inflation particularly remains very sticky, with the price rising by 4.6% in quarter three, an uptick from 4.5% in quarter two. So this is underscoring the ongoing cost pressure in essential services, and the steady elevation in service costs hints at the persistent demand and the wage growth that may keep inflation from cooling as quickly as the RBA was looking to cool down. Okay, so yes, I was actually sitting down on the sofa this morning, drinking my coffee, and I looked at the TV, and it was on the journal, on the 9 News. It was I think it was an economist or something like that, but nothing from the actual RBA. The guy was talking about, yes, inflation has been coming down, but hasn't been coming down as RBA has been expected. RBA was expecting already inflation to be at target. Okay. But just now they got into target. So there was a bit of time. It was a bit of time until the RBA actually getting a sense of how bad the inflation were and bring the inflation down. So now the actual question comes in. With the RBA, with the inflation on target of the RBA, will RBA actually do a 25 basis point cut or won't do the 25 basis point cut? So, some people were talking about it, some people were talking about a 25 basis point, but I don't think it will, I think that the inflationary cooling rises the possibility that the RBA may consider the interest rates cut by early 2025. Okay. I was looking at some analysts. They are anticipating that such cuts may occur gradually and potentially at a pace of 25 basis points, so 0.25% per quarter. Okay. So we're looking at a 100 basis points cut by next year. So 25, 25, 25, and 25. 50, 100. So we are looking to 100 basis points. So that is a 1% down from the mortgage, from the rate. Okay. So the RBA may find itself a favorable position to adjust the rates as the given scenario, thereby fostering sustainability, economic growth. They have to, while keeping inflation well within the target ranges. So they got the target range, they got the inflation on target range. Now it's just, a matter of stabilizing the labor market and the targeted subsides. And from there, maintaining that as, sustainable, very sustainable, as I just say. And then they can start to gradually reduce the target, the rates. I 100% agree with you. Now, that being said, I just want to finish about the economic and the market outlook. The cash rate is still on 4.35%, and that is the level that RBA considers restrictive enough to gradually bring inflation under control without overly impacting employment. So for September alone, okay, the CPI rose by just 2.1% year on year. This lowest rate since July 2021. Right? And while the trimmed mean measure of core inflation remains slightly above the target range at 3.2%, some economists like Abhijit Suara from Capital Economics believe that the core inflation may soon settle within the target range, so potentially paving the way for policy easing in early 2025. I don't believe, okay, to be very honest with everyone, I don't believe that we will have a cut this year. It's funny because if I search right now on Google, right, 4 big Australian banks believe on a cut by RBA in 2024. We can see here, big four banks don't expect a rate cut until 2025. The upshot is that we no longer expect the RBA to cut the cash rate in December 2024. Instead, we pencil in February 2025 for 25 base points. So it's even the big banks in Australia that are in Australia are not believing on a cut. So I made it very clear. I don't think the RBA has how can I say that? I don't think the RBA has is on the actual point of cutting inflation, of cutting rates. They just got inflation under control just now. Since 2021, they haven't got inflation under control. And just now, yesterday, they got inflation under control. So I'm not a big believer that this will actually happen. All right. If it happens, then I think it will be very bullish for the Australian dollar. So bearish. But we definitely have a lot to, wait until December 2024 and, in 2 months and see what can potentially happen. So some biggest Australian retailers like the Woolworths, they have already noted changes in the consumer behavior with the price-sensitive shoppers gravitating towards discounts and reflecting a very good potential for pulling in demand that could contribute to slower inflation going forward. And that's, when we go to the supermarket, I don't know if you guys, I don't know if there is anyone here from Australia. Woolies reduced prices badge. We go into the aisle. Sorry, images. We go into the aisles and we see those, only online specials, not like that clearance. So yes, that was, with misleading discounts. There was having some misleading discounts, but I don't want to show this. I just want to show the actual yellow badge that they put. So this captures your eyes, like half price, like half price here, and so on. All right. So this is definitely, as Willie say, this is definitely bringing the consumers to spend less into daily basis, and this is continue to reduce the inflation with the lower the shopping that consumers are doing. So in summary, while the headline inflation has made significant strides back towards the RBA target, core inflation, that is one of the most important, and in my opinion is the one that actually matters, because it actually excludes 2 of the biggest volatile items, that is the food and the energy prices. So this is what we should be looking at, not only the normal inflation. Okay, so the core inflation continued to persistent and a tight labor market compliance. The case that for rate cuts, for the no rate cuts in the near term. So the RBA upcoming meeting, coupled with the updated economic forecast, will probably give us further clarification about the position and its balance, the inflation control with the economic stability. So most likely we will continue to see, inflation coming down in Australia. So with that, I just jumped myself to the charts here. It's very easy to access FinLogix, guys. It's a public website. It's, you don't need to register yourself. Just open a new tab, type finlogix.com and click enter, and you're going to get in here. And then from there, you can just click on chart right at the top here. Perfecto. And then you can choose your chart that you're going to be looking at: Forex, commodities, stocks, crypto, futures, indices, ETFs. You've got everything. We're going to be looking at Australian dollar at the moment. All right. I want to first show the time of the release. Okay. So we can see that the release was on Thursday. Sorry. Not Thursday. That's wrong. Oh, wow. I was looking at wrong. Sorry. So wait a minute. There we go. Here, 0.8%. That's where I was looking at. Sorry. So my mistake, guys. Before when I was talking about the quarter over quarter, that it sorry, the core inflation, which the RBA monitors closely, rose by 0.8%. It's right, this one, quarter over quarter. Okay, sorry for that. Now, if we come here, we can see that it was released at 11:30 a.m. yesterday, right here. Hmm. Why is it not showing here? Yes, this one. Perfect. Let's go for the 1 hour. There you go. Okay. So the first reaction we had on Australian dollar against the US dollar was going up. All right. So we had a up move. Sorry, right here. Oh yeah, perfect. Right. Got it. So we had a reaction going up for the market, and then later on, a few minutes after, we got the decline. So that was a very mixed data, okay? Because we had yes, it's going down, but no, inflation is still up. So we had these two mixed points. If the inflation was coming to be only down, most likely we would be trading on lower levels at this moment, okay? But inflation came in to be up and down. So as I was saying, we had inflation down from the Australian monthly CPI indicator at 2.1%. And then we get the core CPI at 2.8%. And then the rate, the Australian inflation rate year over year, that is what the most important is, at 2.8%. And this is what the market was looking for. Okay, we had a 2.8%. We saw inflation coming higher at 3.8%. We went all the way up. But hey, wait a minute. This is since 2021 is the lowest print of inflation. Oh, okay, so that's good. Let's go down. And then later on, we saw the market reacting on the other way here. Now I ask yourself, isn't this the best opportunity that we can find at the moment to short Australian against US dollar? So if we come to the 4 hour and just do a bit of a technical analysis, very, very simple, actually, not much needed. Sorry. Here. Like the least volatile asset class. Yeah. We don't have much retracement. Okay, it's trending like the euro against the US dollar. As we can see, we haven't had any retracement. We're having some pullback at the moment on euro dollar, but yeah. So we have this move down, and right now we're having this move up. And if we go for a smaller time frame, like a 50-minute, we can see that this is exactly a pullback. Okay, all right, there. So we had the break of this low, and now we're making this higher low, and now we're going down again. All right. So how do I trade the Australian dollar? Already answering the question. So we have this break right there, and we had the top. Oh, sorry, we had another break right here. Let me check. Yeah, we had another break right there. Okay. Right here. I'm looking to probably target this area. You may be thinking, well, but we had a break to the downside and then we had a break to the upside. But I'm not going to be counting this little small move here because we know that the fundamental wise is still down. So that's the beauty of actually putting together both of them. So we know that inflation is on 2021, since 2021, the lowest point. And we know that inflation and Woolies and all of the big techs are actually reporting slow on the consumer expenditure. So therefore, we may look to trade Australian dollar lower. So, where is my Fibonacci? There we go.
And then it's like a support that on the
right here. We even above the 61, so we don't even have to bother about Fibonacci. I would just get in a trade somewhere around the top of this consolidation. Okay, somewhere around here, where it is right now. And then I would put my take profit around here. And my stop loss just above this level here. Just above this level. Okay, so this would be my trade for Australian dollar against the US dollar just now. Okay, as we speaking, very easy trade on a more than 1 to 2, easy more than 1 to 2. Let's have a look at it. So 1, 2, yeah, 2.5, 1 to 2.5. That's actually really good. You can move your stop loss a little bit up if you prefer, like so slow, like here, and that would be that would do the job. Right. So, simple as easy. Simple and easy. We've just had a trade. Now let's talk about NFP. Let me just switch to this one here. Perfect. And let me go to select all, only United States and this week. Let me send this link to you guys as well on FinLogix. Perfect. Oh, my eyes are really bad. Sorry, let me drink a bit of water. Okay, so first I want to ask, what do you guys think about the NFP? What are you guys looking at NFP? Do you think it's NFP, there's a possibility of coming higher, coming lower? Are you guys looking to trade the NFP? Are you guys not looking to trade NFP? Because we having, a lot of murmurs around about the election, and actually a nice thing to talk about just before we talk about the NFP is it's not on the timetable for today, let's say, but I think it's valuable for us to just, go and talk a little bit about it. I was reading an article about the betting industry and the betting websites and how it's easily manipulated on those periods that we are right now, like an election period or something like that, to exactly manipulate the human perspective of this candidate is winning or that candidate is losing. And for that reason, I want to vote on who's winning, because I know if I vote on who's losing, it's not going to change. Not going to change much, right? So if we go to poly markets, I'm not saying poly market is wrong. I'm not saying anything about it, but I'm just showing the facts for everyone. So right there, we have Donald Trump with 62.7% and Kamala Harris with 37.4%. How does this work? All right. How does poly market works? Well, you have two sides. You have 50%. You have 50-50 chance to win or lose. So we have at the moment 62 people voting. So let's say we have 100 people. Okay, 100 people. 62 people are voting on Donald Trump and 37 people are voting on Kamala Harris. Well, that would be the simple way, right? But here you can manipulate it. If you have more money than me, if there is 60% of voting on Kamala Harris, but you know the remaining 40%, there is a lot of money. They can just squeeze this and change it, the perspective. So what I'm trying to say is, if we look to top holders, we have someone with 21 million shares, 13 million shares, 13 million shares, and then 12 million shares, 6 million, 5 million, 4 million. If we go to Kamala Harris, we have 5 million, 5 million, 4 million, 3 million, 3 million, 3 million. So it's not actually, you know, people believing that, yes, Donald Trump will win or not. It's just about the money, okay? Because right here, we can see that Donald Trump has much more money than anyone else, all right? Just right there on the first 4 lines, 21, 13, 13, 12. So 26, 47, 47, 60. So pretty much 60,000 compared to Kamala Harris. There is 5, 10, 14, 17, and it goes like that. So there's not much, okay? So the top holders, yes, they're voting on Donald Trump. And this is why we have such a skewed to Donald Trump out of nowhere. And this is influencing the market, yes, in a sense of a stronger US dollar. But I'm not saying that the euro is, oversold or anything like that. It's actually, yes, the US dollar has been coming from a very strong set of data. GDP, well, just yesterday we hadn't had a good GDP, but I'm not talking about exactly the same one yesterday. I'm talking about coming from a month, 2 months ago. Okay, strong hawkish FMC. So there's a lot of things to actually happening on the market to be strong for the US dollar. It's not only this, but this is contributing. All right. Now, if we actually take something that is not a betting website and is actually a official pool, let's call it an official website that people are trustworthy of, this is not a BS or something like that. We're going to be looking at different results. Okay, so let's go at USA.
Be very careful, but still good to build good habits and do things like
pools, election 2024. That is not on betting websites. Let's go for the New York Times. Everyone knows New York Times. Election 2024 polls, Harris versus Trump. Right here, we can see that Harris is 49 and Trump is 48. So what's going on here? Right, so it's completely different. But that's what I'm saying. Something that is trustworthy, like the New York Times, they have 219 people voting on Trump and 226 electoral votes on Harris. So there is a chance for Harris to win the election. And if Harris win the election, we're going to be having a very bullish EURUSD. Okay, very bullish EURUSD. All right. So that being said, I was just, I thought it would be good to touch base on this, and because a lot of people were actually a little bit lost about it. Is this something that has to do with the market? Is it something that has to do with the market? What's going on? Right. So Sweets has sent a message. Sweets has said, judging by the chart DXY so far for the week, I think the market might be expecting something negative on Friday. Yes. So now coming back for NFP, I do believe on you. Right? I do believe on you. I am believing on a, let me just scroll down. Sorry guys, let me just take some of those. Oh wow, it's so slow. Sorry. Oh no, sorry guys. Just get this and just put the high impact. Perfect. So on Friday we have unemployment rate, the non-farm payroll, and as well, let me just put the median. Perfect. And we're going to have the average hourly earnings as well. So let's go for it. Unemployment rate, 4.1%. So no changes from the previous 4.1%. The non-farm payroll is expected to be 115,000 from the previous 254,000. That's really, really not great. And the average hourly earnings is expected to be at 4%. Okay, so no changes from the previous as well. My thinking is that yes, we will probably have a set of weaker economic data from USA. And there is no big reason, but this is from the month of October, and we had the hurricane this month. So a lot of people got unemployed. A lot of people have to close down the business. A lot of people had to do, cut on salary jobs and etc. So yes, most likely we will have an unemployment rate as is expected, but the non-farm payroll, we may be looking around even below expectation or as expected, but it's going to be below the previous. That's for sure. We're going to be looking below the previous. Okay. If there is three main possibilities, as I always say, if there is the mixed data, the bullish data, and the bearish data. Okay. The mixed data is if everything comes, mixed, unemployment rate comes higher, average hourly earning comes lower, and NFP comes as expected. Okay, so that won't be tradable. That will be crazily up, crazily down, and this is it. End of the volatility. If we have a bearish move, that is every release, unemployment, NFP, and average hourly earnings come lower, we may look to trade long on EURUSD and continue to go higher for gold. If we see all of those three coming higher, then we may look to trade bullish on the DXY, looking to trade higher USD/JPY, higher, lower EURUSD, lower Aussie dollar, and etc. Okay. Now, my expectations is yes, somewhat as Sweets was saying, judging from the DXY, we're looking, expecting something below what is expected. Now, talk about EURUSD, talk about Aussie dollar. Let's talk about talk about EURUSD. I forgot to talk about EURUSD. So we've just around the corner of breaking through again this top. Okay, so that's a 50 minutes. Let's go for 1 hour. Perfect. Okay, right there. All right. Remember I was saying this is where we broke to the border right here. And we're looking to break above this stop. We just touch it there on the price of 108,713. If we have a breakthrough that, an actual break, a close above that level, we may be looking to trade EURUSD higher. And if we continue to trade EURUSD higher, the first target, of course, will be 109. And there is going to be a lot of players trying to defend that area, because it's a even number. Not an even number, it's a round number, sorry. That's safe. Yeah, 109 right here. If we break to the 109, then my next target will be just above 109,800. Okay. But first, we need to break through this 108,700. After we break that, we're going to have 30 pips that we can trade above to 109. Okay. If we continue to go lower, then would be looking to sell it. Okay. Because I do believe that euro is oversold and there is an opportunity to trade EURUSD higher. Now talking about GBP USD. What I would say, how I typically drink some water. USD I just hit his stop loss. Yeah, that's fine. It is what it is. We can't, this is trading. We have to move on. We have to analyze why we've did it wrong, and we have to move on. So let's say. So yeah, GBP USD it's a little bit more confusing. I wouldn't be looking to actually trade. It's just because we broke down here. The top range would be around there, and if we break through this area, then yes, we may be looking to trade higher to this area. But again, as a election scenario, everything can be completely the opposite as what I'm just saying. If let's say or Trump or Kamala Harris wins or something happens completely different of what we're expecting, but there is targets to the upside, and I'm believing most likely we will continue to see Euro trading higher and not lower anymore. Okay, that's my perspective of the market at the moment. Last but not least, gold, and that's the one that everyone is looking at the moment. Everyone has their eyes on. Gold is absolutely crashing it, all right? Gold is going every day higher and higher. We've just hit all-time highs again, $2,790 per ounce of gold, per an ounce of gold. And we are looking at continue to go higher. As I mentioned, my target is at $3,000 for gold. But, you know, the main reasons why we're looking at gold going that high is the last quarter of the year has tend to be very good for gold. Some of the reasons are the market gets shrinking volatility, so we don't have much volatility, so we won't be having much players on the trading floor, banks, and provide liquidity to players. Holidays, they go for family holidays, they have Christmas, etc. So most of the investors just take the money and put into gold and leave it there until January, February, and they come back and they can take the money off. And they still made something and not left the money only on the bank account, you know, doing anything for them. So there is definitely opportunity to continue to look for gold high. I would definitely wait for pullback. Most likely we can see this pullback before elections. But on elections, if Kamala Harris gets elected, we will see gold going to 3,000 very crazily. All right, guys, we've come to an end. So just finalizing here. So why is German GDP contracting? Mainly reason is we do have the possibility of Volkswagen cutting down some costs and closing down 3 plants on German, and this would affect immensely the population as well as the economy, as they can't keep up with the EV. All right, China has been better than them in terms of that. They have to do something, otherwise they will break down everything. Showing CPI record lows. Will RBA cut this year? Most likely they won't cut this year. RBA will be looking to cut only next year, most likely. Okay, a 25 basis points cut. So we have to be paying attention on that as well. NFP just around the corner. How should we trade? I've given my 3 scenarios: bearish, bullish, or mixed. And EURUSD looking to trade long, Aussie dollar looking to trade short, pound dollar looking to trade long, and gold looking to trade long. That's the portfolio at the moment. Guys, thank you so much. I see everyone on next Tuesday, Wednesday as well, and Thursday. If you have any questions, please message me on the Telegram or send a message on the comments on the YouTube video. Have all a great weekend, and see you guys. Thank you so much. Bye-bye.